What if I told you that the money in your wallet isn't actually money? What if I told you that in 1971, the dollar died and was replaced with something else entirely? Something that looks like money, feels like money, spends like money, but isn't. And what if I told you that this switch, this quiet, invisible death, is the reason why your parents could buy a house on one salary, and you can barely afford rent on two? This isn't conspiracy theory. This is documented history. August 15th, 1971, a Sunday night, primetime television. President Richard Nixon appeared on every channel and made an announcement that changed everything. He killed the dollar, and he did it in less than 10 minutes. Most people didn't understand what happened, but the people who did, they got rich. Everyone else, they've been getting poorer ever since. Let me show you what really happened that night. To understand what died in 1971, you first need to understand what money used to be. For most of human history, money was something real. Gold, silver, commodities you could hold. These things had intrinsic value. They were scarce. They couldn't be created out of thin air. And for over 150 years, the US dollar was backed by gold. If you had a dollar bill, it wasn't just paper. It was a claim on a specific amount of gold held in a vault. You could theoretically walk into a bank and exchange your dollars for actual gold. That was the promise. But after World War II, something changed. The United States became the dominant economic power. And in 1944, at a meeting in Bretton Woods, New Hampshire, world leaders made a deal. The US dollar would become the world's reserve currency. Every other country would peg their currency to the dollar, and the dollar would remain backed by gold at a fixed rate, $35 per ounce. This system worked for a while, but there was a problem. The US government was spending money it didn't have. The Vietnam War, social programs, foreign aid. All of it required printing more dollars. But remember, those dollars were supposed to be backed by gold, and America didn't have enough gold to back all the dollars it was printing. Other countries noticed. France, led by President Charles de Gaulle, started demanding gold in exchange for their dollars. They didn't trust paper anymore, and they were right not to. By 1971, the US gold reserves were being drained. If it continued, America would run out of gold entirely. The system was breaking, and Richard Nixon had a choice: stop spending, cut programs, admit the dollar was overextended, or change the rules. He talked about protecting American jobs, stopping currency speculators, defending the dollar. And then, buried in the middle of his speech, said this: I have directed Secretary Connally to suspend temporarily the convertibility of the dollar into gold. Temporarily. That word was important, because it made the decision sound reversible. Short term, no big deal. But it was a lie. The suspension was never lifted. That night, the gold standard ended. Permanently. And with it, the dollar, as people knew it, died. From that moment on, the US dollar was no longer backed by anything. No gold, no silver, no commodities, just a promise. A promise that the government would continue to accept it as payment for taxes. A promise that people would continue to believe in its value. That's it. The dollar became what economists call a fiat currency. Fiat from Latin, meaning let it be done. In other words, money by decree. Money because the government says so. And here's the kicker. Most people didn't realize what had happened. The dollar still looked the same. It still spent the same. But its nature had fundamentally changed. It was no longer a store of value. It was a tool of policy, a tool that could be printed, inflated, and manipulated without limit. In the months after Nixon's announcement, economists and financial experts debated what this would mean. Some thought it was brilliant, necessary move to free the economy from the constraints of gold. Others warned it would lead to disaster. Both were right. In the short term, it worked. The US didn't have to keep hemorrhaging gold. The dollar remained the world's reserve currency. But in the long term, the consequences were catastrophic. Let's look at the data. Before 1971, inflation in the United States averaged around 1 to 2% per year. Stable, predictable, manageable. After 1971, inflation exploded. The 1970s became known as the decade of stagflation, rising prices, stagnant wages, economic chaos. By 1980, inflation hit 14%, the purchasing power of the dollar collapsed. What cost $1 in 1971 costs over $7 today? Your money lost 85% of its value in 50 years. But it's not just inflation. Look at wages. In 1971, the average American worker could buy a home for roughly 2 to 3 times their annual salary. Today, it's 6 to 8 times. In some cities, 10 to 12 times. In 1971, a single income could support a family, a house, and a car. Today, dual incomes barely cover rent. In 1971, college tuition cost a few $1,000s. Today, tens of thousands. Sometimes hundreds of thousands. Why? Because when you untether money from something scarce, when you allow infinite printing, prices inevitably rise. And wages, they don't keep up. Because the people who get the new money first, governments, banks, corporations, spend it before prices rise. By the time it trickles down to you, it's already worth less. This is called the Cantillon effect. And it's why the wealth gap has exploded since 1971. So if the death of the gold standard hurt average people, who did it help? Follow the money. When the dollar was backed by gold, there was a limit to how much the government could spend. You couldn't just print more gold. But once that limit was removed, spending became unlimited. The national debt in 1971 was under $400 billion. Today, over $36 trillion, a 90x increase. And who holds that debt? Banks, financial institutions, foreign governments, bondholders. They loan money to the government, money created out of nothing, and collect interest on it. Trillions of dollars in interest, paid by you, through taxes. But it's not just government debt. Think about what else exploded after 1971. Credit cards, student loans, mortgages, corporate debt. Why? Because in a fiat currency system, debt is the product. Banks don't make money by holding your savings. They make money by lending. And when money can be created infinitely, the incentive is to lend infinitely, to keep you borrowing forever. This is why every financial crisis since 1971 has followed the same pattern. Excessive lending, asset bubbles, collapse, bailouts. And who pays for the bailouts? You do, through inflation, through taxes, through the devaluation of your savings. The system privatizes profits and socializes losses. And it only works because the dollar is no longer real money. It's a tool of control. Now, here's what most people don't realize. The death of the dollar in 1971 set a precedent. Once the world's reserve currency abandoned gold, every other currency followed. The British pound, the euro, the yen, all of them are fiat currencies now. All of them are created as debt. All of them are losing value. And the same pattern plays out everywhere. Printing, inflation, wealth gap, crisis, repeat. Look at Argentina. They've had multiple currency collapses because of uncontrolled printing. Look at Turkey. Inflation over 60% in recent years. Look at Venezuela. Their currency became worthless. Literally. People started using it as wallpaper because it was cheaper than buying actual wallpaper. And yet, the system continues. Because fiat currency gives governments and central banks ultimate power. The power to fund wars without asking permission. The power to bail out banks without accountability. The power to transfer wealth from savers to debtors, from workers to asset holders. And as long as people accept the currency, the game goes on. So what do you do with this information? Here are 3 critical lessons. 1. Understand what money is and isn't. The dollar is not a store of value. It's a medium of exchange controlled by policy. If you save in cash, you lose. Because inflation is built into the system. 2. Assets beat currency. After 1971, the smart money moved into assets. Real estate, stocks, gold, Bitcoin. Why? Because these things are scarce. They can't be printed. They hold value over time. The rich got richer after 1971 not because they worked harder, but because they owned assets. 3. The system will not fix itself. Politicians will not return to the gold standard. Central banks will not stop printing, because the current system benefits them. Your only defense is knowledge. Understand the game. Protect yourself accordingly. Here's the uncomfortable part. This system has lasted for over 50 years, and it might last another 50, or it might collapse tomorrow, because fiat currencies always eventually fail. History proves it. the Roman denarius, the French assignat, the Weimar Papiermark. Every fiat currency in history has either collapsed or been replaced. The dollar is no exception. It's just taken longer because it's the world's reserve currency. But even that is changing. Countries are moving away from the dollar. China, Russia, and others are creating alternative systems. The dominance of the dollar is not guaranteed. And when trust breaks, when people stop believing in the value of paper money, the collapse happens fast. So ask yourself, what will you do when the system resets? What will you do when the dollar dies again? Because it's not a question of if, it's a question of when. If this video changed how you see money, share it. Because most people have no idea that the dollar they use every day isn't the same dollar their grandparents used. They don't know what happened in 1971. They don't know why everything feels harder. Now you do.
Hey.
Subscribe for more videos that expose the financial truths they don't teach you. And comment below. Did you know about the Nixon shock? What do you think happened that night? Let's talk about it. Thanks for watching. And remember, the dollar died in 1971. What we're using now, something else entirely.